Hello everyone and welcome back to a new video. My name is John and today we're going to talk about the slew of IPO activities on Bursa Malaysia in 2022. I'm going to break down some interesting statistics for you. Next, we're going to talk about NationGate, an EMS provider based up in Penang, which is going for listing early next year, January in fact. And we're going to talk about their planned IPO proceeds, their financial status, their revenue segment breakdowns, and last but not least, the risks involved if you were to partake in this IPO. So stay till the end of the video to find out all these breakdowns. As a disclaimer, this video is for educational purposes only and should not be construed as a buy or sell recommendation. If you do need license advice, please speak to a licensed financial planner or fund manager. So there have been a flurry of IPO activities for Bursa Malaysia in 2022, and I don't think we should be surprised because there have been pent-up demand after a lockdown of so long, 2 years. And I saw on the statistics of Bursa Malaysia some interesting stats that I wanted to share with you. Main market listed companies 5, Ace Market 25 makes the chunk of the IPO listed companies in 2022, and Lead Market 5. So the activities that we see in 2022 has actually surpassed that of pre-COVID days in 2019 and 2020. And we should be encouraged because even with a looming recession as predicted by most economists, most market observers in 2023, the capital markets is coming back to be alive. And some of these companies that are listing have actually tapped the debt markets, gone to banks to borrow for capex expansion. And this is now an opportunity for them to par down some of these bank borrowings so that at least with rising interest rates, they can actually negate the risk of being caught up by margin calls. And I think why I'm covering NationGate is one of the reasons for that is they are paring down a big chunk of their bank borrowings through this IPO listing, which I'll discuss further. So before we discuss about NationGate paring down its bank borrowings, let's get some basic statistics out of the way first. They're planning to raise 165.5 million from this Ace Market IPO. It's going to be the largest listing on Ace Market for Bursa Securities. I'm just a little bit surprised why they didn't go for a main market listing. But anyway, by the time the list, a market capitalization of 790 million is expected, debuting on January the 12th. Maybe that's a good feng shui date for them. Issue price of 38 cents and enlarged share cap totaling about 2.1 billion shares. So it's actually quite big. So here we go, the IPO utilization for NationGate. As mentioned earlier, bank borrowings repayment will form up the biggest chunk of their utilization, about 64% or 105 million. Now, here, if you have followed me in my previous videos before, I'm very skeptical when people actually list and use it to repay borrowings. But in this particular case, after reading deeper, why they had such a big bank borrowing was because they were expanding during COVID, but they tapped the debt markets instead of the capital markets to expand. And that's why most IPOs, when you look at their utilization, is usually for capex. But for NationGate, it wasn't so much for capex. Capex is only what, 3.6% or about 6 million purchase of machinery and equipment. They took the leap of faith, expanded their factory first using debts, and now they're using the IPO proceeds to par down. So it does, it's always a judgment call again. But I think one of the reasons why I'm giving NationGate a little bit of a discount is because they expanded it in anticipation for the growth in 2023. And as I discuss the revenue segments later, you probably understand why they're not too worried about the prediction of this oncoming recession in 2023. Taking a look at NationGate's P&L, healthy revenue growth, healthy net profit. Obviously, in 2019, it was not a very good year for them. 5.2 million net profit on a revenue of 325 million. In 2021, obviously, it was a good year for them. 760 million, that's almost a threefold jump in terms of revenue. And looking at their GP margins, high single digits, low double digits, very expected of an EMS provider. What piqued my interest, but I haven't gotten deep enough to understand, is their effective tax rates, 16.72 in 2019, but then 2021 it dropped to about 5%. So they made some concessions maybe from the government. And in 2022, it's going to be high again. It's roughly about 17%. Comparing NationGate Holdings to their peers, for those of you who are familiar with the EMS industry, I'm pretty sure you've heard of ATA IMS or ATA Industrial. Negative this year because they made a loss. Aurelius, PIE Industry, SKP, contractor for Dyson, and SMT Technologies, plus VS Industries. Obviously, it paints a better picture for 2021 for 2022 for them, NGH 7.8%. But remember, on aggregate, I don't think we should use 7.8 as a basis for the average. It should be somewhere between 3 to 5%, which is a normal profit margin take for any EMS provider. So here comes NationGate's revenue segments. As you can see, a big chunk of their revenue actually comes from networking and telecommunications. 60% in 2019 and 65 or 66% in 2020. Industrial instruments come second and data computing comes third. And as you can see, consumer electronics form a very, very small chunk, about 1.3%. And that's in line with what we see today. There's a big slowdown in consumer electronics globally. And I'm glad NationGate isn't part of it because they will be impacted if they were having it as a big chunk of their revenue contribution. The networking and telecommunications segment has a lot of tailwind behind it because of the adoption of 5G, industrial Internet of Things. A lot of factories are starting to get more automated as they reduce reliance on labor. And I think that's where this tailwind can actually benefit NationGate. With all the tailwinds that NationGate actually has, we do also have to look on the other side of the coin, which is the risks involved if you were to partake in this IPO. And looking at their business model, I categorize into 4 main risks. Obviously, it's not exhaustive, but I'll start. First one is their dependency on imported input materials. So what do I mean by this? Their PCB boards, their IC chips, all these are denominated in US dollars and it has to be imported rather than self-produced by them. They don't manufacture these chips themselves, they don't manufacture this PCB themselves, but more think of them like a Lego assembler that assembles all these things, including the mechanical casings for the finished products. And like if you think about telecommunications equipment, normally these are like in rack switches. So the plastics, the steel brackets and all that, these are what NationGate has to purchase for this final assembly. Secondly, they are also very dependent on customer A, which makes up about 56% of their revenue. And the nature of the industry does not even allow them to have long-term contracts. The agreement is usually just through a purchase order, a PO. And because of that, they don't have that comfort or solace of a recurring revenue. It's really based on supply and demand, based on how the customers are doing, and they're just relying on a PO. The third is actually fluctuation of the US dollar, because the revenue and purchases, 95% of it is denominated in US dollar. The strengthening of the ringgit or the weakening of the ringgit towards it actually makes a huge difference to their revenue and profit. Therefore, strengthening of the US dollar definitely benefits them, and the strengthening of the ringgit actually is detrimental to them. Last but not least, the risk of reliance on foreign labor. For those of you invested in the glove industry or even the semicon and electronics industry, we definitely remember Andy Hall and his expose to a lot of the worker dormitory conditions. Now, I look at it as a blessing in disguise. Because of Andy Hall's work, a lot of EMS providers, glove manufacturers had to up their standard on worker dormitories. And it benefits them because with the ESG team looming, you better pay up front and you better have a higher standard for taking care of your workers and worker welfare. But at the same time, I think there's also a risk that these guys have to realize foreign labor come and go. Foreign labor are also due to fluctuations of government policy changes. One day the government just says that, hey, there's a levy that I'm going to increase, and it makes them cognizant that there are certain automations that they have to put in place to reduce that reliance. Obviously, it's easier said than done because all this is cost, but yeah, that's one big risk that all EMS providers, including NationGate, have to take care of. So my concluding thoughts about the NationGate IPO. First and foremost, EMS is a very low margins, labor intensive business, but it is still needed in the value chain. Someone's got to do it. Foxconn's got to do it. I mean, 200,000 workers. If you follow the news, there's been numerous protests because of the COVID lockdown, and they're losing workers by the week. But someone's got to do it. So there is a place for NationGate within the value chain. Second concluding thought is that they are a proxy for the growing demand of electronics. Now, the beauty about their niche is networking and telecommunications, which is an unseen infrastructure, but needed, definitely needed. With the prevalence of 5G, with the prevalence of industrial Internet of Things, I think this is a segment that has more tailwinds comparatively to the consumer electronics, because that is really a function of consumer purchasing power. Whereas for industrial telecommunications, industrial equipment, the infrastructure has to grow. Somehow or rather, someone's going to pay for it. Your telcos, your networking companies, and including your cloud-based companies. This is where CapEx has to be poured in to grow the infrastructure. Last but not least, I think NationGate's advantage is being housed in Malaysia itself. There's a thriving semiconductor electronics ecosystem, suppliers, clients, and also just SMEs that actually support this industry. And if they were to do it, in Vietnam, yes, it's up and coming, but because it's up and coming, there's not established supply chain routes, supply chain infrastructure, and Penang has all of it. And I think that is a key advantage for them to be in Malaysia. There you go, my thoughts on the flurry of IPO activities in 2022, as well as my thoughts on the NationGate IPO. If you like content like this, subscribe to the channel, give it a like, so that the YouTube algorithm can actually spread this message to more like-minded individuals like you. And I'll see you guys in the next video.